thank you for taking time today to speak with us. Help me please figure out what's the best way to go about planning a big home renovation or new construction project with a homeowner.
Mm-hmm.
Would you say a few words about yourself first, because before we plunging into all the questions that I have?
Of course. Thank you for having me here, Alicia. My name is Sabina Pond. I am the founder and president of Bay CPA Plus, a boutique CPA practice that specializes in helping a real estate investor, business owner to diversify the portfolio. A lot of the clients that come through our practice have questions or issue relating to either their home or their investment property. So I've been advising them on taxation issues, and if they have a portfolio of real estate, also helping them with their accounting, right? Accounting for the incomes expenses. So that's what we do. And in outside of the practice, I'm also an investor myself. So I've been using financial advisors, bankers, insurance agent, etc. So my personal experience, today I'd like to share with you what I would advise my client, but also to share a little bit of my own personal experience as well. So thank you for giving me the forum and share with your audience what I learned, and hopefully that can be useful to you and your audience.
I am positive about it. Because you know what, even just looking at the abbreviations that people use in this industry, sometimes is overwhelming. And most of people who are just, adding on an accessory dwelling unit to their property, they might just meet the accountant once a year during the tax season, and it doesn't even, enter their head that they might need his advice kind of in the middle of this project. So can you, a few words, kind of what sort of CPA, CFP, what do all these things mean?
Of course. So CPA stands for Certified Public Accountant. Is a professional designation where you have to fulfill certain education requirement, work experience. So, and just like attorney, CPA can specialize in certain industry or specialty, right? So you have, just like attorney can specialize in family law or criminal justice, etc. CPA can focus, there are people who focus in auditing, like big company, public traded company, and you have CPA like me, who is a boutique focused in real estate or certain taxation. The other tax advisor out there, so you have called a EA, which is enroll agent. They are they're specialized in just doing tax compliance. So they are trained by the IRS. They have fulfill certain education and experience requirement to be called enroll agent, EA, right? Certified Financial Planner, which is CFP. They are the financial planner that look at your portfolio, your investment plan, and probably advise you on how you're going to allocate your asset, right? So it could be in real estate, could be in stock, can be in oil and gas or gold. Those are CFP. Now, within the financial industry, so I think frequently you have something called CIMA. Those are the Certified Investment Management Analysts. So those are the people who look into the detail of certain security, like stock or mutual fund or ETF. So you have people basically in the financial services. Those are the things that you need to ask when you interview someone, what their specialty. That's very important, right? The CPA, like I am, if I don't get the credential to be able to advise you on insurance or mutual fund or anything else, then I should not be qualified to give you that advice. So the first thing that I do advise my client, and also the things I find out for myself, is that you ask the person who say that they are financial advisor, like, what your specialty? What's your specialty? What do you do? What are your clients are who are your usual client, right? So I will not ask someone who specializes in doctors to tell me about something about oil and gas. You know what I'm saying? So there's a specialty that you need to find out for yourself. And then the other thing is that for people who The one thing I find is that in the financial service industry, anybody can call themselves financial advisor because there isn't a laws or regulation to say you can call. So an insurance agent, for example, they can call themselves financial advisor because they're giving you some sort of financial advice. You could be a banker, also can call themselves financial advisor because, they're helping you to shop for interest rate, right? So those are the things that I think you need to do your whole homework a little bit, asking what they specialize in, what are their credentials. There's a reason that you have seen those initial behind people's name because they haven't gone through the education requirement. They haven't gone through certain, work experience so that they fulfill a certain industry requirement, like CPA, like attorney. A lot of specialists, we have to have a minimum numbers of continuing education to be updated on the laws and regulation that are happening. So that the other thing that you can ask the person that you're interviewing with is that what do they think of this, the new law that has just passed, right? So there's a bit of homework that you can ask to say, to make sure that person know what they're doing and they are specialists in their area. So I talk about the three things, right? They are specialists in their field, they're up to date with their knowledge, and the third thing is to check their credential. So for all those credentials I just mentioned, CPA, CFP, CIMA, there is industry regulatory bodies that you can look up to make sure that the credential is up to date and there's no, I would say, disciplinary action against them. So those are the three things I would say to start asking the question so that you know that they're coming off legitimate and they have nothing, anything shady going on. I mean, if you're really concerned, if you are giving a lot of wealth for someone to manage, you probably would even want to run a background check on that person. I mean, that's a bit extreme, but I do run into one or two clients who have quite substantial investment. Maybe when you have a small project, you don't need to go that extreme, but could be. This is something that keep in mind.
Yeah. Question. Is that okay to ask for references?
Yes.
Like, is it accepted practice?
Yes, it is. Mm-hmm.
So one shouldn't feel like we are kind of, how do I put it nicely? One shouldn't feel that we're doing something politically incorrect when we are asking for references.
Oh, no, not at all. I mean, it's kind of tied into what I'm going to talk about the next thing is about being transparent, right? I mean, if someone's legit and they are reputable and they have been in industry for a while, they would have clients that can be good reference. So, ask away. Trust me, this is actually, as a professional, I appreciate that the client or potential client being diligent because that means that they would take my advice seriously because they have done their homework. So yeah, don't be afraid. I mean, this is a legitimate question that you should ask is to protect yourself and actually to get the relationship off on a good start because you are on a transparent, equal basis.
Yeah. It's interesting because I had a conversation with a client one day and he was sitting there like, well, I'm making them work before I even am sure that I'm giving them work. And I was telling him that by not asking, you're not even giving them a chance. So it's better to give them a chance to get work with you than just sit there and wonder if it will be a good fit or not. Yeah.
Right. That's important, right? I mean, when you work with someone, whether it's a financial advisor or a contractor, there's two parts of it. One part is that the hardware, they know what they're doing, they can do it. The second part is that you have to get along with them. It's supposed to be a fun relationship. You're going to be working with this person for quite a while, so you want to make sure that you like them and you guys can get along. So don't be afraid to ask questions. I think the reputable and good professional would appreciate that.
And you started talking about transparency and about fees. Like, what are the ways to structure the fee for the fee structure with something like a financial advice?
So yeah, so the first thing is, right, the professionals they're not running a non-for-profit, so they can't do things for free. But on the other hand, you can, and you're entitled, and this legitimate question to ask them how they're compensated. Ask about if you have a project in mind already, ask them, based on this criteria, what would the estimated fee to be, right? In the case of, if you ask someone to do a financial projection so you can get a loan, you can ask them, okay, this is my profit and loss statement. How do you charge, by the hour, by the project? Is it a financial product? So financial advisor, if, for example, if it's insurance agent, you are essentially buying insurance products. So you ask them how they're compensated, right? Or for financial advisor, they could be fee-based, where basically they do a financial plan for you and they charge you a fee, or they charge you by the asset, like the number of, the amount of money that you bring into their practice for them to manage. So you ask them how the fee is structured, because that way you understand, you can take this information and go to another financial advisor, kind of compare on an apple-to-apple basis. So, but yeah, so that's ask them for how the fee structure, and be cautious. Be cautious. Those people say there's no commission or fees, because what that means is that they have to get compensated somehow, right? If they don't charge you, who's going to pay them? Just remember it comes from somewhere. So the question, you make sure that, once you understand how their fees structured, then you understand how their recommendation is coming from, whether those recommendation comes with a hidden fee somewhere else. If they don't charge you upfront, it has to be in the back end. So just be aware of that.
Yeah, and it almost feels like there is some psychology thing going on there, because we are looking, we are seeing the person for the first time, and we are trying to find their motivation, and sometimes that motivation is hidden, and that basically sounds like almost like a red flag. So if somebody is not explain it, that means maybe it would be better to kind of move on. That's
right. And it also, the other side of the coin is that, do you take free advice seriously, right? I think that's the thing too. If you ask for free advice, you probably end up not taking them. Honestly, I mean, it's like you say, it's a psychology thing too. So, when people give you free, or there's no commission or fee, just be aware. Just keep it in the back of your mind that it has to comes from somewhere, right? Whether it's the quality of the advice that you're getting, or that there will be some sort of backdoor commission somewhere else. So yeah, just a little caveat.
And I think you've mentioned earlier that a good financial advisor, I mean, especially the one that was licensed, they will never recommend just one product. They will also have options.
That's correct. Yes. So that's the thing. I mean, for people who are licensed, they gone through ethics. They have also compliance that they have to go through. So they would not, and it's tied to the compensation as well, right? So ask them how they compensate it. If they say, oh, there's no fee, but then they recommend the same sort of product from the same company, then they are most likely getting commission from that company. So for someone who is more neutral, who will compensate based on upfront fee, they would recommend, hopefully, this is a homework that you have to do as well, to make sure that, the product or services to provide is across several companies. If you end up buying like 2 or 3 financial products, like for example, ETF or mutual fund, make sure that, they are from a different fund company, or they're from a different broker and dealer. So.
And one more thing that I would like to kind of go deeper in is about matching, like a match between you and your accountant or financial planner. How do you, like in your experience, how do you make sure that you're a good match with your client, or you're a good match with your advisor?
Okay, that kind of go back to what I talked about earlier, right? The hardware and the software. The hardware is that you understand their experience, their credentials, and how they charge their fee, right? So those are the things that what the person can do, and then how much that you'll be getting the advice. The second part is the software that you get along. So I would say, from my own experience, the people that the client that I work the best with, or the advisor, my other advisor, the lawyers and bankers, insurance agent that I work well with, is that again, you sit down with them, you talk to them, you talk to several of them before you engage one of them to kind of say, okay, you're in, I want to say similar age, but it's like the similar goal, similar philosophy, right? So you could have, if you are pretty risk averse and you like routine, you probably would go well with advisor that share that a similar personality and philosophy. Versus if someone who like to take risks and don't mind the volatility, they probably would work for someone, again, with a higher risk tolerance. So I would say this is a homework, unfortunately, you have to do and kind of interview a couple, right? You get a feeling of whether you get along. It's just, for lack of a better word, it's almost like dating. You know, you go there and see whether the, the chemistry works, you know?
Yeah.
And of course, that's on top of the other person, it is credentialed, is qualified, and they specialized in the area that you're looking for. Mm-hmm.
Yeah, okay, thank you. Can we walk through some examples? Say there is a homeowner who
Mm-hmm.
has equity in his own
Mm-hmm.
house.
Mm-hmm.
The house needs major work.
Mm-hmm.
So the homeowner is facing the kind of challenge of deciding, should they add an accessory dwelling unit? Should they add an addition to the house? Should they, you know, like just sell and move? How would you help structure this thinking process? Like, where would you start if that was you?
So my first is ask them what their plan is. I think, you know, you can't provide solution until you know what the person want. Now, obviously, you can say, okay, they don't know what they want. Okay, so if we go down this route of someone who doesn't know what they want, then in that situation where they have some equity and they want to, then you ask them, what do they want with their house? Are they they want to stay and then make it beautiful so they can sell it at a higher price? Or they want to add in additional units so, you know, they can have guests coming over. In case they have grown-up kids, so the kids can come in without, you know, they can live with you, but without living under the same roof, right? So you start on the question of what their lifestyle, what their aspiration, what their goal for their life is. And then you kind of narrow down to, okay, what they like this house to do for them, right? Is it going to be their retirement home? They're going to stay there forever? Or is it something they just want to get the equity out and do something else? So the first question is obviously what they want. Hopefully you have an idea of what they want to do with the house, and then you would go into the more financial, the number crunching, right? So you can start with, okay, this is the house currently without any renovation. This is what can be sold for, and this is how much you can get into your pocket, right? And the other thing is that, you know, this is the house, but if you can get this loan at this interest rate, this is how much you can get out, and you can use this equity loan. Maybe you can use half of it to build additional unit, which increase the value of the property down the road. And then you use the other half to beautify the main house, or you can just use that money to invest something else. Again, you need to go through the number crunching based on the scenario that you want the most, right? So present several options. So you can do it, or you can invest the whole 100% equity and beautify the home, and so you can, you know, for example, people who are getting older, so they don't want to climb up and down the stairs, then probably they want to install something that is good for mobility. So yeah, those just out of this thing you talk about, there's three different options they can do, right? One is that they just sell it as it is. Second is that pull some equity out, you know, make the house more valuable, right? Either by adding unit or modify the main home, or doing both. So the third option is to do everything.
Yeah. Well, let's make it more difficult. Let's do everything.
Okay.
We want to beautify. We want to stay. We want to beautify, and we want to have an additional unit so that we could rent it out.
Right. Right.
So is it a scenario that, like, if I were your client, is it something that I would come to you to discuss? Like, how do I best finance it, because I don't have any cash just sitting there?
Right. So if in this case where you don't have extra cash lying around and you are counting on using the equity in the house, to do the other project, I think the first step actually would be talking to a appraiser or realtor, because you want to understand, based on the current situation of the house, what would that sell for, because you need to understand the market value. If you just want to get the equity loan, maybe the first is actually a banker. You talk to a banker that and say, hey, this is, the house is free and clear. I want to put some money out of the house. How much can I afford, right? Because the banker would do, if they specialize, again, they had to specialize in the home equity line of credit in that particular area. So the first step is talk to your banker, who you have the existing relationship with, and tell them this is what I'm thinking of. What do you recommend, right? So this is one way to start getting the conversation started, and then you understand the value of the house, how much equity you can get, and based your income situation, what the interest rate you can get, and therefore, then you have an idea of how much money or equity that you can work with. And therefore, from there, then you can decide, okay, out of this, I don't know, 200,000 or 300,000, I can do the additional unit first and then beautify the main home second, or vice versa, or you can do everything. That would be great. You can do everything in the same go. So you have to have that first conversation first with the banker, understand the value of your home and how much equity you can get.
So when do I need to put it in front of my accountant? Like, when does the accountant need to know about my plans?
Well, at the same time, you're talking to the banker, because you need to understand the tax implication, right? Because based on the equity that you pull out, you would have to pay interest on it, right? And based on that interest, whether it is deductible for a tax situation or not. So don't talk to your accountant at year end, please don't. Engage your accountant early on, because that would help you. If the accountant that you're working on are very in tune with the tax ramification, they would advise you in your situation whether it's a good thing or bad thing, and whether the interest rate is higher or not. Because as accountant, I work with so many clients and know their situation. I can pretty much tell you, like, oh, you probably, why are you getting this such a rate? Because I've seen things lower, or whatever. So the professional, the accountant, the CFP, they've seen so many clients that they would give you a better range of what's going on in the market. So that's a good reference point.
Yeah. Another thing that comes up in my daily work all the time is that people forget to think about actually property taxes.
Yes.
And then they get hit at the end of the year, and they go like, oh my God. Suddenly they were so used to the grandfathered tax percent, right. And suddenly they get this 200K addition, and wow. So so I'm totally on board with you on that one. So that it's important to talk to.
And also in that case too, right? I think before you build a unit, it's good for the people to go down to the city or the county assessor, because even though there's a sort of the common baseline, but I think different county have different rules. Just because some county are wealthy than the other, they have probably better school, they need to fund. So there may be different special assessment or a local regulation that the homeowner need to check in with the county assessor and even the city planning to understand how what they're going to do going to impact them.
Yeah, it's funny you mention it, because I'm actually usually, when I go out to the meetups and events that I have, I usually carry around with me the brochure from the Santa Clara County Assessor Office, because it actually lays out pretty transparently what the implications of various scenarios are. And it's I agree that it's pretty important to kind of think ahead and not get too excited by a new construction project.
No, it's good to do it, but you should understand the implication. I mean, I think it's good to do something rather than not do anything and miss out the opportunity to make your house more valuable. But at the same time, it's just that every decision make this consequence. So educate yourself by talking to the regulatory agency, etc., so that to educate yourself, basically be more informed consumer.
Yeah, and actually something else has come up recently, and that concerns what do you call it? Amortization. Because,
amortization, yes.
Yeah, because it came up when the general contractor was insisting that everything goes through him, including, for example, appliances. And if I understand correctly, if a homeowner does appliances himself, they've got a different kind of rate of amortization than the whole house. So kind of mixing it all together, he might be not using it properly. Do you know what I mean?
So amortization usually is for intangible. I think first of all is the depreciation of the asset, right? So if this property end up being a rental property, then you can on paper you can generate a sort of, they call it depreciation expenses, which offset your rental income. Now, if this property end up being your own home, you can't take depreciation of your own home. However, the amount of money that you use to upgrade your home is part of the cost basis. So when you sell it down the road, then this increase the cost basis will reduce your capital gain. So so that's the difference. The intended use of this property, it may determine whether you need to worry about depreciation or not. Now, if this property end up being a rental unit, depreciation for different, I would say, a different part of the house are different. So the house itself, if it's rental property, it go on a longer, you have many more years to depreciate versus refrigerators or the heating unit, they're shorter. So yes, so this is something a good CPA, a good accountant would let you know what would be. But ultimately, you have to know what you want this property to do for you. You know, be it your own home or it's a rental unit.
Yeah. Okay, that's important. I forgot about that little detail. I remember that there was some conversation about depreciation, but I wasn't sure which way it was going. Thank you. That was very good. You have saved me here. One more thing before we wrap up, because I think I'm kind of outstaying my welcome.
No, don't say that. It's okay.
You've mentioned that I, as a homeowner, before contacting the financial planner for the first time, need to do some homework about what questions to ask. And can you give us any pointers, like where do I look for new things in real estate connected? What I call them?
Well, I mean that's one of the reasons that people use Yelp and they use all this. I think the word of mouth is important, right? So I would imagine, even if you don't know a particular financial advisor or insurance agent or realtor, your friends or your neighbor, your coworker probably knows someone. So I think the good start is to start talking about people that you already know, and ask them whether they know someone that is really good. Especially, real estate is a very local matter. So where you live, your neighbors, your coworker who live in the same area probably can give you someone that is in the area that, first of all, barring the whole COVID situation, you can talk to them and easily accessible in the same time zone, and that they specialize in the area that you're looking into and hopefully share relevant information.
Well, what I was getting into, that's actually also valuable, because I think it brings us back to being kind of clustered in our own territory for this kind of thing, for everything real estate related. But what I was trying to figure out was, like, if I am to ask them a question to figure out if they're up to date on the current regulation, how do I find that question? The magic question that will help me understand that they're up to date.
Okay. First of all, as I said, go to, if they're CPA, you go to Board of Accountancy. Google regulatory body for whatever, right? CPA, CFP. So you kind of go to the regulatory body to make sure there's no disciplinary action against them, that they're licensed current. If they're licensed current, pretty means that they have they have up-to-date continuing education requirement. That's that.
Okay.
The second is to, ask for consultation. Some of them offer complimentary ticket. If they do charge a little fee for the consultation, if it's a big project, I advise you to pay a little bit of money upfront so you can get a good advice. And then go to consultation, ask them, what do you think about this? Do you have other client that's in similar situation that I can talk to, right? Again, ask question. If they're good, if they're reputable, they're certified, they're licensed, they should have no problem give you reference and give you a straight answer, right? Just watch out for the very evasive answer of like, oh, I don't know. If it is something I don't know how to say, it's almost like instinctive, right? As a consumer, that you probably can tell someone is trying to sell you snake oil. But yes, go for the reputable, licensed and certified professional. Look up their background, and then ask for consultation and ask those questions. Bring your issue to the table, and ask for do you have other clients that's in similar situation that I can talk to, right? If they're, again, if they're good, they're reputable, and they're legit, they should have no problems giving you a straight answer.
Anything else I should have asked you about, but I forgot?
Let me go through my list, because funny enough, I've been writing, I wrote a blog for something related to your question, and I've covered all of this, right? The specialists, regulations, credential, the fee structure. The other thing too, when you do get to the consultation, depending on the project, like what if you just ask a question of about your house, the value. I think as a consumer, you probably also need to prepare your own financial a little bit. So if you are thinking about getting your equity out of the house, for example, when you talk to your banker, you probably should, bring in your latest property tax assessment, bring in your latest tax return. So any sort of financial document bring along with you, so that when you sit down with the potential advisor you're going to work with, they have something they can go off, right? Because a lot of times we may have remember things differently than what is showing on the paper. So the more, I would say, detail you gather on your own home or your own investment portfolio or your current insurance, the better, because you need to have some sort of baseline for the professional to work off. Right?
Right. Yeah, thank you.
Yeah.
And with new elections coming up, I think we need to be really aware of what the candidates are promising. I'm hearing the rumors about getting down on 1031 exchange, which is by itself a complicated matter. But when you're starting to add on these complications of
right, it's not just 1031. 1031, it will be just one of the things that got impacted. The bigger issue is that whether you are able to defer your capital gain down the road, right? Whether they want to tax it now versus later. I mean, that's a bigger issue. So 1031 will be just one other thing that be impacted. And that's important. I think as consumer, as a taxpayer, you want to elect official that have your interests at heart, right? Because whether it's a Democrat or a Republican, when the regime change, they're going to have their certain directive in terms of the whole tax situation, whether it's income tax or wealth tax or capital gain. Those are the issues that you need to, educate yourself, be informed, read up on the regulation, make sure that you're comfortable with whoever you elected. But yes, get out the vote. I think it's important.
Well, that sounds like a very good question for this year to be like how up to date the accountant is. I think that's a good start, right?
Right. Yeah. So again, just be educated. Do a little bit of homework. The one thing I do appreciate the American culture is the do-it-yourself, right? I mean, now, and also with technology, with Google, it's so easy to look up things. First, to do the homework, educate yourself, so that when you go to meet with the potential financial advisor, you already come in with a lot of questions. And that way, actually, is a good way to weed out the good versus not so good professional. Because once you have listed a question, then hopefully you can see, you can get the very straight answer to your question as well.
Well, thank you very much for your time.
No worries.
It's funny that you mentioned this homework all the time because you know that my company is called Homework in Progress, but I always start with giving homework to my clients because as you've mentioned earlier, until I know what they want, what they envision, I have no way to help them. It's like...
Yes. But on the other hand, you are a good professional. You sometimes too, people don't know what they don't know. So as a good professional, you present the I would say several options or alternatives that be in front of the client, your client, so that they know that you actually, you know your stuff because you have seen enough that you can share with them what you have seen and maybe some of the idea would come to fruition because, you know, they didn't know as much as you do, right? And,
and that's the way we go from homework to homework in progress. That's exactly it.
Yes, we're all work in progress. So,
Okay.
Well, thank you for your time, Alicia. Thank you for raising good questions.